Okay, so we have Anjali, Ayushi, Gaurav, Nitya, Rahul, Rishabh. Okay, so maybe let us wait just a couple of more minutes before we start. In the meantime, if you have any questions, you can probably ask your questions. We can continue there and let others join. Okay, so uh, we could probably do revision for level 1, right, today, and level 2 and level 3, because level 3 does not have much to cover. That we can combine with level 2, and we can do it on next Saturday, right? So level 1 we can try to cover today. So if you have any questions, doubts, maybe we can take them and we can discuss them today. And right, that is how we're going to proceed and going to cover it. Okay, so maybe let's wait for a couple of minutes. In the meantime, if you have any questions, anything, you can probably just uh, just jot them down, or just maybe bring them handy for yourself.
सर
Yeah.
सर
Yes,
हेज
Gaurav.
फंड के जो पार्ट्स हैं स्टैंड अलोन साइड बाय साइड मास्टर फीडर एंड फंड्स ऑफ फंड इसको एक बार डिक्लेयर कर देते प्लीज
Okay. Okay. So hedge fund. When you say standalone fund, so it is just a one fund, right? It's one fund wherein all the investment is happening there only. So pooled money comes in this standalone fund, and the fund manager assigned to the standalone fund is going to decide where the investment is to be made, and basis that investment, the profit and loss and everything would be calculated on a daily basis. So like in the mutual fund also, that accounting principles are followed for calculation of the NAV. Same is applicable for hedge fund also, and the reconciliation, calculation of NAV and everything is done for the hedge fund. So where his standalone is the one, as the name suggests, it's a standalone. It's just a one fund and one fund manager that is set up, that's open in one country, and it is going to do investment as per the understanding of the fund manager and for the uh, mentioned, the mentioned objective of the investment, which is always in case of mutual fund also, in case of hedge fund also, that objective is shared with the investors. So that is the standalone one. Then side by side, you say, so what happens? So in the side by side hedge fund, so there is a one fund which would be run by the fund manager in US, as an example, and on the similar lines, there would be another fund created outside US. So this fund, which would be probably open in a region which would be which would not be having much of tax liabilities in that region for the fund manage for the fund as a or you can say as a company as a whole, which is operating those hedge fund there in that country. So they would not be having the same level of tax liability there in those region where they have opened this fund. So in one is in the US, and they are all copying the methods of investing, and all those thing is just mirrored. It is mirrored, you can say, in the hedge fund, which is open as a side by side in a different region. Especially these funds are open in a region where the tax liabilities is lesser compared to the one where the original fund is open. So this is a kind of a side by side fund. You would name it or define it as a side by side fund. And then we come to the another one, the master fund, master feeder fund. Master feeder fund is the one wherein all the investment of the sub fund which are open in different countries would be flowing directly into the master feeder fund. So the master feeder fund is the one which would be doing the investment, which would be deciding where they need to invest and what they need to invest into, and all those decisions would be taken by the master feeder fund manager. But the fund would be utilizing or pooling in that money from different countries, right? So that is what that's the good thing about the master feeder fund. So they would be pulling in from money from different regions, different countries. But then the master fund, as in the master feeder fund, would decide where they're going to make that investment. So especially in case of master feeder fund, also these master fund are usually open in regions, in countries where the tax liability and all those expenses are lesser. So that's the fundamental idea. So these
सर
funds are
फीडर फंड और ये फिर फीडर फंड क्या होती है मास्टर फीडर फंड में?
Yeah, so master feeder fund is the one which I'm talking right at the moment. So master feeder fund is like there are various funds open in different countries, but there is a master feeder, means all those funds are feeding into this master. Master means the main one. So all the funds which are being pooled in different funds, right, in different countries. So all that pooled money would be feeding directly into the master feeder fund. And the master feeder fund is usually open in a country where the tax liability and all those expenses are lesser. So like the example which I gave you, the Cayman Island and British Virgin Islands. So these are two regions where the tax liabilities are usually less for opening fund and all. So you would have seen hedge funds usually operate from such regions where the tax liability is quite less. So here the master feeder fund is standalone. The difference is standalone is just a mirror of the as in the side by side fund is a mirror of the standalone one, which is open in a region where the tax liability is less, right? And they are copying the methods and methodologies of the standalone fund, and standalone will be working there in different country like US. And the master feeder fund is where every fund which is collecting the pooled money from a different regions or different country, that fund money would be pooled into the master feeder fund. The master feeder fund would be deciding where they need to invest money. So that's a fundamental difference between the master feeder fund and your side by side fund, right? It's a basic difference between the two. And the last is a fund of fund. So fund of fund is basically here it is kind of a passive investment, you would say. So passive investment in a sense, the fund manager would not have to do a lot of effort in deciding like where to do an investment. They have already decided they're going to invest in the other funds, which are performing good, which are giving good returns to their investors. So that is this fund of fund is something also quite common with mutual funds, right? So hedge fund also copies this strategy, and as I would say, it has come from hedge fund only. So hedge fund invest on those funds which are already existing one, which are following very good strategies. So that they get the pooled money from the investors, and that pooled money is then is flown into those funds which are really doing good over the years or over the time. So that pool money is put into those fund of funds which are already in the public domain, or where the investors are already invested. So there those money are invested. So these are four different kind of your hedge fund, you can say.
सर इसमें अनऑथराइज्ड और अनरेगुलेटेड का क्या मतलब है हेज फंड में?
Hedge fund, yeah. So the hedge fund category, when you talk about hedge fund come under the unregulated environment in a sense. So hedge funds are not monitored that strongly like your mutual fund. So mutual fund has a very strong regulation around them because the investment which mutual funds have, that usually come from retail investors, and every investor is able to invest in mutual fund. Therefore, mutual fund have to be very very careful or mindful about where the investment is being done, and therefore mutual funds are regulated in every country. So in Europe, in India, they are regulated by the market regulator. Like India, who regulates mutual fund? SEBI regulated. But if you talk about hedge fund, are they regulated? No, they're not regulated, because hedge fund is meant for sophisticated investors who have got good money, and who understand the reward and risk associated with investment in hedge fund. So those investors are only allowed to invest or put their money in hedge fund, and therefore they're called unregulated, and that is how you would say hedge fund are unregulated.
ओके सर लास्ट इसमें एक पॉइंट आती है गियरिंग, ये समझ में नहीं आया हेज फंड में.
Okay. Gearing is like leveraging. Gearing is another word for leveraging. So gearing is used when you take borrowed money, okay, and that borrowed money is used for investment. So that term is called gearing in this hedge fund world.
Okay, sir.
Yeah. Yeah, I see. Yeah, do you want to say something? Yeah, go ahead.
Yes, sir. Good afternoon.
Yeah, good afternoon. Ayush.
Sir, is Gaurav here?
Yeah, Gaurav is there.
Yes.
Right. So, sir, I wanted to share one thing. So the last weekend we had like a session with Namita ma'am, and I could not be there because I was there, I was present, but I could not speak. I could not turn my camera on. Firstly, because I am undergoing some family issues which are very major, and secondly, I was at the hospital where I logged in. So I was with my nani in the ICU room, so I could not speak at that time, and which I duly shared with the teacher as well, with the trainer as well. So she understood. बट गौरव शायद मजाक करने के मूड में थे, तो गौरव ने बोला कि मैं व्हाट्सएप ग्रुप में बात कर रही हूँ, टेक्स्ट कर रही हूँ, लेकिन मैं यहाँ पे कुछ नहीं बोल रही हूँ. तो आई टोल्ड हिम कि मैं टेक्स्ट कर सकती हूँ, which I am doing in the class also, but I can't speak. तो ये चीज मैंने उनको कहा, लेकिन क्योंकि गौरव ऐसा बोल चुके थे कि मैं व्हाट्सएप ग्रुप में बात कर रही हूँ, तो जो हमारी ट्रेनर थे उनको ऐसा लगा कि मैं शायद झूठ बोल रही हूँ, जिसकी वजह से मेरा इंप्रेशन उनके सामने खराब हो गया. और मैं क्योंकि बोल नहीं सकती थी, इसीलिए मैं जस्टिफाई भी नहीं कर पाई उस चीज को. बट नेवरदलेस मैंने गौरव को टेक्स्ट किया और उन्होंने पिक्चर मांगी मुझसे, ट्रेनर ने, कि आप मुझे पिक्चर भेजिए अभी के अभी हॉस्पिटल की, कि आप कहाँ पे हैं, आप झूठ तो नहीं बोल रहे हैं. तो आई सेंट अ पिक्चर इन द व्हाट्सएप ग्रुप इटसेल्फ. मैंने कहा गौरव को कि गौरव आप प्लीज जूम लिंक पे इसे शेयर कर दो, मेरे पास ऑप्शन नहीं आ रहा है, दिस इज द पिक्चर ऑफ द हॉस्पिटल. एंड ही सेड कि इसमें आप नहीं हो, इसीलिए पिक्चर वैलिड नहीं है. तो गौरव, मैं आपको बस इतना ही बोलना चाहती हूँ कि प्लीज, अगर आपको नहीं पता चीजें, आपको नहीं पता कि किसी और के साथ क्या चल रहा है लाइफ में, तो प्लीज इट्स बेटर कि आप उनके साथ मजाक ना किया कीजिए. बिकॉज आपने पर्सनली तो अपोलोजाइज कर दिया, बट पब्लिकली एक ट्रेनर के सामने मेरा इंप्रेशन खराब हो गया है, बिकॉज आई कुड नॉट स्पीक, आई कुड नॉट एक्सप्लेन वेयर आई एम. इट्स नॉट दैट आई कैन स्पीक, इट्स नॉट दैट कि मैं इंटरेक्ट नहीं कर सकती, मैं सब कर सकती हूँ, बट मेरी सिचुएशन ऐसी नहीं है लास्ट 2 months से कि आई कैन स्पीक. आई एम अंडरगोइंग समथिंग वेरी सीरियस. I have not even presented my presentation. I have not given my mock 2 as well for that. I was suffering from COVID. My whole family was suffering from something. You can't apologize in public. You can't apologize in personal after saying something insensitive in the public. You have to take that back, Gaurav.
Okay, so Gaurav, I
You
would
should have
suggest
said that कि आप मजाक कर रहे हो.
नहीं सर,
एक trainer के
मजाक
सामने
कर
मेरा
रहा था, बस इसको सॉरी भी बोल दिया, मतलब कोई.
गौरव, आपने वहां नहीं बोला जहां आपको बोलना चाहिए था कि आप मजाक कर रहे हैं. आपने
अरे
मुझे
ऐसी
पर्सनली
सुनो, आप क्लास में आ जाओ, आपको क्लास में सॉरी बोल दूंगा, इसमें क्या है, कौन सी ईगो मेरे पास है, मजाक किया थोड़ी तो आप.
नहीं गौरव, आप अभी भी बात को नहीं समझ रहे हैं. आप यहाँ पे आर्ग्यू मत कीजिए. यू कैन सिंपली एक्सेप्ट व्हाट यू डिड, कि आपको नहीं पता था और आपने मजाक में बोल दिया और उसका आपको कॉन्सिक्वेंस नहीं पता है.
वो एक मजाक का माहौल था,
आप सीधा बात कर सकते हैं इस बारे में, लेकिन क्योंकि मैं नहीं बोल पाई लास्ट टाइम, आई वॉज एट द हॉस्पिटल, मैं नहीं बोल सकती थी, इसीलिए मैं नहीं बोल पाई. And now I want to speak, or it's the best way I can coordinate this thing with you. क्योंकि और मैं किसी तरह से आपसे बात नहीं कर सकती, तो मैं क्लास में बेटर है. और आपको बोला भी था, बाकी स्टूडेंट्स ने भी बोला है आपको ग्रुप में कि आप ये कैसा मजाक कर रहे हो, तो आपने बोला बस यार ऐसे ही, यूं ही मेरा मन कर रहा है. आपको 10 बार बोल दिया 10 लोगों ने कि there is something very serious with the other person, you should not joke like that.
Yeah, so I would, as in, this is Gaurav, this is right, and it goes for everyone, right? So as long as we're not aware about, and rather even if you are aware about what is going on, so then also we should refrain commenting on anyone, whether known or unknown, right? So these are sensitive matters, and we very well know, like we as in there are a lot families going through a lot of difficult time, and we all realize, we all know this, it's not some, but at the same time, Ayushi, I would say, don't as in don't be, as in don't take it like your impression is has been as in it's been created, and it's been a problem. No, it will not be a problem. So you can probably I know about your situation, probably you also told me about the situation, so I know, and that way your impression is not bad at me for sure. And as far as Namita ma'am is concerned, probably because she, I guess, took your which class, like was it soft skill session, right, if I'm not wrong?
Yeah. Yes, sir. Yes, sir.
Okay, so don't worry about it. Maybe just drop her a message, and maybe if you have number, I do not have her number. Otherwise, I'll drop a message from my side also. That would not be a problem. So if there is something where is she is assessing on some of the assessment and all, so you need not worry about it. So probably that can be taken care later also. So don't just be, as in don't take it, don't be overburdened with this thing, like you would be marked down, or you would be assessed as in that as in with negative marks and all those things. So
Right.
but again, Gaurav, and for everyone, it's not only alone for Gaurav, because at times we don't understand, realize like what other person is going through, and therefore we should refrain commenting or talking anything which we are not aware of, because that may create unnecessary, you know, problem for the other, and as well as for you, because you are not privy of the matter which the other is undergoing, right? So so that's not fair to the person, and it's not fair on your part also when you are talking about something which you're not aware about at all, right? So you should only be talking facts. That is the best thing, and not necessarily you should be talking about the other, because you should you should be more, one should be more concerned about himself or herself rather than concerning about the others. So that's my suggestion to everyone, because I don't want such things to happen in my class, and anyone feels offended about any of the matter, it becomes a concerning area for me as a trainer, right? So I want to address it upfront to everyone, so that we understand the sensitivity, and we understand what we are supposed to be here, right? As in what we are here for. All these things we should be very clear with, right? So so that's what I want to say. And going forward, we need to be very mindful about such things. We cannot afford to have such things happening, right? Hope it makes
Right.
sense
Right,
to
sir.
everyone.
Yes, sir.
Yeah, fine. So okay. Yes, Pranav, go ahead. Pranav, want to say something?
Yes, sir.
You go ahead.
Sir, even I want to say that कि मेरा भी आपको पता ही है कि what the problem is already going on.
Yeah.
सर मैं अभी आपको कुछ टाइम से इसलिए अपडेट नहीं कर पा रहा हूँ क्योंकि सर देयर इज अ थिंग इन माय माइंड कि आई डोंट नो व्हाट टू से सर कि मैं अगर आपसे बात करूंगा ऑलरेडी मेरा मॉक 2 नहीं हुआ है इवन मेरी प्रेजेंटेशन भी ठीक नहीं गई थी सर अभी ऑलरेडी थोड़ी कंडीशन ज्यादा खराब चल रही है तो मैं आपको अपडेट इसलिए नहीं कर पा रहा था डेट माइट भी मेरा इंप्रेशन खराब हो जाए कि मैं मॉक या कुछ अवॉइड करना चाह रहा हूँ दैट्स नॉट अ रीजन और सर इसलिए मैं अभी आपको कुछ अपडेट भी नहीं कर पाया अभी आयुषी ने बात की तो इवन आई ऑल्सो थिंक
Don't worry,
that
right?
even
So
I should
I
also
would
share.
say, yeah, so I understand, guys. So you need not worry about difficult situations, and being like you guys are. I'm a human being, right? So you are you're most welcome to share your difficult situations which you are going through, and we do consider those things. It is not, we don't consider them, right? So if someone is really going through a difficult situation, we as a group need to be supportive to the people because it is not something which can happen with only a one person. It can happen with anyone, right? So we need to be very mindful about these things, and therefore, Pranav, I would say you need not worry about those. As in, if you been through a difficult situation and you want any sort of a support, right? So you can let me know in person, and you can probably drop a message. You can call me up, and that you've done earlier also. I don't mind about those
यस
things.
सर, बट सर मैं अपनी साइड से कुछ भी अवॉइड नहीं करना चाहता, बिकॉज सर मेरे को भी है कि मॉक हो जाए, सब हो जाए, इवन आई एम ऑल्सो वर्किंग हार्ड फॉर इट, बट सर कुछ अब सिचुएशंस ही ऐसी है, आई एम नॉट एबल टू मैनेज एवरीथिंग अकॉर्डिंगली सर, तो प्रॉब्लम हो रही है। बट अब मैं इस बार आपको अपडेट इसलिए नहीं कर पाया कि सिचुएशन कुछ भी हो, बट आई हैव टू डू वर्क ऑन इट, और कैसी भी तरीके से मैनेज करके बस मैं मॉक दे दूं, क्योंकि सर मेरे को यही हो रहा है कि कहीं ना कहीं अब सिचुएशन जो भी है, बट मैं आपको अपडेट इसलिए नहीं कर पा रहा था कि कहीं 1% ये ना हो कि मतलब लाइक इवन आयुषी इज ऑल्सो राइट, इवन द पॉइंट मतलब गौरव ने पॉइंट आउट किया, या लाइक वॉट एवर द थिंग मे बी, मेरे को भी हो रहा था कि कहीं मेरे पे भी किसी तरीके से कुछ पॉइंट आउट कुछ ना हो, और लाइक इसलिए मैंने नहीं किया अपडेट।
So you guys need not as in rather than so you can directly talk to the trainer, so that way you would also be relaxed, and every trainer understand this is a difficult phase that we're going through as this COVID situation has really been very overwhelming for the people, especially living in Delhi and other metropolitan city, right? It's been very overwhelming, and that's not hidden. It's uh, very very much open, right? So that way we will consider your difficult instances, and we'll try to accommodate those things. It goes without, because first is health. If you're not healthy, your family members are not healthy, you are busy on those instances or on those things, there is no point doing anything else. It's very clear, right?
Yes.
So that is how things are. So I would say, like, if you can manage, then you can do that. You can but if you feel like it's difficult time, you would need more support, you need more time to do your as in the level 2 mock or level 3 mock preparation. I would not say no, because I know if you have a difficult time, so that means you require more time. So I would not be just pushing or pressing my thing and would overrule everything. No, it is not like this. So I am concerned about everyone's situation, right? And therefore you are most welcome, as in just let me share, as in let me know your your situation, and accordingly we can manage all those things. It will not be so much as in, don't take it just inside you, and just do not, because if you keep it inside you, you don't tell me, then I would not be able to know it, right? And if I don't know it, then I would not be able to help you for sure. I can help you, I can guide you, I can support you only when I am aware about the situation. So that is something which you need to keep updating me, keep me posted about what you're going through, so that I can actually support you. And that is what I can, as in the best which I can do. And if you need any other kind of a support, do let me know. We can think, and that's feasible, we can definitely do that.
Thank you, sir.
Yeah, no worries.
सर एक शॉप में आती है, जैसे कि पोजीशन शॉप टॉपिक की क्वेश्चन है सर एक। सर इसमें जैसे कि ये सर पोजीशन को इंटरचेंज करते हैं, जैसे कि एक लिवोर प्लस ये सर बीपीएस आती है।
हाँ,
तो एक की फिक्स इंटरेस्ट रेट होती है और सर दूसरे की फ्लोटिंग होती है। फ्लोटिंग में सर लिवोर प्लस बीपीएस आती है। और सर लिवोर तो समझ में आती है, बट सर यहाँ बीपीएस मतलब बेसिस पॉइंट्स होती है, इसको मतलब एज ए परसेंटेज किस तरह से कैलकुलेट करते हैं सर, ये समझ में नहीं आती है।
ओके, So okay, so fixed is a fixed we know, and LIBOR is your benchmark, which as in which will soon be phased out, as we discussed by 2000. In fact, most of the LIBOR would be phased out by 2021. Some part of LIBOR which is on USD, that would be phased out by next year. So a new benchmark that is SOFR that we were talking in the class also, that would be replacing LIBOR now going forward. But LIBOR, it's a benchmark wherein whatever, it's a floating. LIBOR is floating, right? So then when you say basis point, right? So that is a margin basically. So when you are agreeing with your counterparty, when you're agreeing with your dealer, right, who's offering you a particular, like, interstate swap or whatever transaction you're doing, so there would be some margin which would be on top of your LIBOR. So that is what that basis point which you're referring to, that is floating. Again, it's a floating. LIBOR plus something is LIBOR, whatever LIBOR would be in that time, so that would be there. And on top of that, there would be some margin applicable. Margin can be point as in 25 basis point. When you say 25 basis point, that means 0.25%. And when you say 50 basis point, that means 50.50%. So half percent you can say. When you say 75 basis point, so that means 0.75%. When you say 100 basis point, that means 1%. So 100 basis point means 1%. So that is how this is added as a margin by your counterparty or your dealer who are offering you different kind of transactions. So there the margin is applicable to give you that offer which you are aiming to obtain from the dealer.
सर बीपीएस को कैलकुलेट करने के लिए सिंपली हमें मतलब 100 से डिवाइड कर देनी है.
Simply 100 से, या राइट.
ओके सर. तो वही सर, वो उसमें क्वेश्चंस पूछते हैं मैथमेटिकल, तो ये समझ में नहीं आ रहा बीपीएस का मतलब.
हाँ, तो आपको अगर मान लो निकालना है 25 बेसिस पॉइंट दिया हुआ है, तो अगर उसको आप 100 से डिवाइड करोगे, तो दैट मींस 0.25% इज योर 0.25 इज द परसेंटेज टर्म्स में आ जाएगा.
ओके सर.
Right, so that is how it is. Okay, so let us Okay, I hope I'm audible now.
Yes, sir.
Okay, fine. So
Yes, sir.
I'm sorry for the disruption because looks my laptop has it's really been has been quite old now.
It's a tough situation for the laptop.
Yeah, it's been old like me. Laptop is pretty old. It needs time. So you know what happens. So if you are not charging it, it it is you never know when it is shut down. So there is some battery issue. So it needs a constant battery supply. So if I unplug it and all of a sudden it goes without even the battery would be looking full, but it will go off. So it requires some special, you know, uh, treatment. So okay, so we were talking as in about this first class we would be doing uh, for level 1 mock, and then okay, collateral management, right? So yeah, so collateral management briefly, if I just talk about briefly, so there are 1 second. Can you see my screen? No,
Yes, sir.
it is visible, right?
Yes.
Oh, fine.
I can't see, sir.
No, sir.
You can't see?
Sir, even I can't.
Sir, sir browser
No,
खुला
sir.
होगा ना आपका?
Yeah.
ब्राउजर तो देख
Is it
पा रहा हूँ सर.
okay? Browser. Okay, but I guess this is stuck somewhere. Looks like.
Oh,
Let me 1 second. 1 second. Or this screen share is not working. One second.
Sir,
Yeah. Yeah.
sir,
Go ahead.
difference between FX forward and non-deliverable forward. And sir, one more thing is there. Like if a country has a fixed currency and it want to switch to fluctuating currency, then how will it impact its economy and in vice versa condition also?
Okay. So the two things when you look at uh, let me just answer your second question first. So when you look at the floating currency vis-a-vis fixed currency, right? So the fixed currency has some uh, some benefits or some pros there. So the people doing business in the country, or they are the one who are actually driving the economy, you can say, in one sense, corporate or various other people, right? So they are the one who are driving the economy. 1 second, let me just 1 second. Damini is asking. Yeah. So now it is fine, right? Now I guess you can see my screen, right?
Yes, sir.
Okay. Okay. So when you as in compare, right, your fixed currency vis-a-vis your floating currency. So fixed currency has some benefits. At the other hand, it has some uh, disadvantages. So disadvantages in a sense, you do not know the real progress in the economy. The progress which is happening in the economy is a uh, kind of monitored or kind of designed as per as per uh, your own arrangement, right? Its own arrangement, country's own arrangement. So you have decided to increase your to increase your product manufacturing and productions and all. So with that, or in short, I can say that to uplift your GDP. So you take support of fixed fixed currency system, and with that, it can help you to some extent, wherein you need not worry about the fluctuation which is going to come in the trades and all. And when you look at the trades business, this is what is deriving the economy of the country. When you talk about the economy, so what does it actually mean? It basically means what is being generated with the help of all those manufacturing unit, all those corporate who are working in your country, right? So what income they are able to generate, that is what is available to the government in the form of tax, GST and all those. So if there is some fluctuation in their income, as in the income of those traders who are working, flourishing in your country, so for sure the net effect would be your taxes and GST, all those things would be hampered, just Apurva, just put your microphone on mute.
मम्मा ने तो वो भी चार्ज कर दी है ये
Guys, please put your microphone on mute, everyone. Apurva, yours I guess is on, so you need to put it on mute. Okay, so therefore, when you look at fixed income currency regime, so there the benefit is you need not bother about that big fluctuation which is coming in the currency, and therefore you would be sure about the resultant income or the net income, you can say, which you're going to draw from your counterparties, or right, that way you can be sure. However, when you look at the disadvantages are, this is not actually the real economy. The real economy, it means when the currency is free float, that reflects the real economy. So how strong the currency is can only be judged when it is free float. So when it can feel the pressure of the different currencies and where it can sustain, so that gives the real strength of the economy. So that's the disadvantages. The currency would not be able to have this, that the real strength would not be there. It's a strength which is created, which is designed, which is made up, right? So that's the disadvantage, you can say. On the other hand, when you talk about the free float currencies, the free float is where the government would not have to concentrate on fixing the currency, because this becomes a task for the government. When the government says that they are going to do the fixing of the currency, so they will have to constantly keep a watch on this aspect. The currency is fixed. So how the currency is fixed? When you say the currency is fixed, because the central bank of the country is keeping tab of the currency flow, of the currency flow coming from the other countries, so that has to be managed by printing new notes or printing new currency by the government of or central bank of that particular country has to print the currency. Only then your the rate can be fixed. So that thing would not be needed when you having the free float currency. The government would be focused on other aspects of the governance, which would be development and thinking about the employment aspect or all other various issues which a country has. So on those issues, the country would be or the government of the day would be concentrated on, and therefore they would not be bothered about fixing the currency, because fixing a currency again is a task where the government has to put in a good effort to ensure the currency is actually fixed on ground. So that's the difference between these two currency, fixed and your floating. However, when you look at the fixed as in the currency forward and non-deliverable forward, the currency forward and non-deliverable forward, if you look at the technicals of those these two, yeah, go ahead.
Sir, my question was like, चाइना की करेंसी फिक्स है, अगर वो चेंज कर लेते हैं फ्लक्चुएटिंग के अंदर, तो इकोनॉमी पे क्या इम्पैक्ट पड़ेगा?
Okay, if they change to their floating, right?
यस सर, अब फ्लोटिंग अगर फिक्स से फ्लोटिंग पे जाएंगे तो क्या इम्पैक्ट पड़ेगा इकोनॉमी पे, और अगर फ्लोटिंग से फिक्स पे जाएगी कोई इकोनॉमी तो फिर इकोनॉमी पे क्या इम्पैक्ट पड़ेगा?
So yeah, so the thing is, if they change their currency, if they go into a floating mode, right? So then their currency will start strengthening if they are having a higher demand, if they are able to do a lot of export, right? If they are doing a lot of export, which is the situation on ground. So what this country is doing, country has got a lot of avenues for export, and therefore they are having a great economic revival or great economic development in a sense. But if they remove their unfixed thing and they make it floating, so their economy will, as in the currency will strengthen. So if the currency will strengthen, so at the one hand, those cost which is involved in procuring the raw material for producing those things which they're producing for export, that would be costlier. So maybe it is not feasible for all the businesses which are thriving there in the economy to thrive with the same speed with which they are able to do today. And therefore, they would not be having the same level of momentum which they are able to have by keeping their currency fixed. So that is one thing. That is the thing which will happen. So their economic growth would not be, you can't say it would be linear, it can be non-linear also. Like some part of the economy is growing fast, some part of the economy might not be growing that fast, because it all depends upon the procurement of the raw material on which they are able to generate generate those things which they are using for exports and all, and therefore their economy would be giving the real projection, wherein I'm not saying they would be in bad shape. No, they would not be in bad shape, but it would not be a linear growth, you would say.
Sir,
Right now they are having a linear. Yeah, go ahead.
सर एक्सपोर्ट्स तो फिर कम हो जाएंगे ना अगर फ्लक्चुएटिंग में कन्वर्ट कर लेते हैं तो, और फिर जीडीपी पे भी नेगेटिव इम्पैक्ट होगा।
राइट। तो सिंपल फंडा ये है कि अगर मान लो आप आज 10 रुपए में कोई चीज बेच रहे हो, अगर आपका खुद की कॉस्ट महंगी हो गई है, तो मे बी योर दैट सेम प्रोडक्ट माइट बी 15 रुपीज, राइट और रॉन्ग? If that's 15 rupees is there and I can avail the 15 rupees, the product has 15 rupees in my own country, why would I be purchasing it from you? So that means some of the products which you are selling would not be sold with the same pace or same momentum, and therefore your economy would slow down. Your economy would not be racing or pacing, would not be running with the same speed at which you are able to do it now by fixing your currency. So that will happen with China, or for that matter any other country which has got the same model which China is using. Hope it is clear. Any more question on it?
Yes sir. Sir, then we can conclude it कि अगर fix से fluctuating पे जाना है तो it will impact negatively on the economy.
Yeah, it can impact negatively, but it all depends. It is not necessarily that everything would be negatively impacted, right? Not necessarily everything is negatively impacted. Maybe some of the businesses, some of businesses are not able to survive, and therefore they are shut down. And those are shut down, that means those businesses are not going to contribute in the economy. So economy is down, right? Economy is just you can say it's a collection of all those all the players in the country. If all the players are contributing, then economy is strengthening every day, and it is just becoming bigger and bigger with every passing day. However, if some businesses have got really high cost, right, so that means that costlier item would not be having any value in the foreign country, and therefore they will have to shut down, they will have to close their business. So it may impact some part of the business, it might not impact, because if you see, when you make your currency free float, and if all those product which you're consuming to make your product is not costlier, then you would be able to sustain, and your this export will continue. But over time there is going to be some slowdown in the economy, in a sense the trade which you're doing would be slowed, because if the cost is increased every now and then, or when I say every now and then, means over the years, then for sure the demand would be reduced gradually, and therefore the contribution which is happening in the economy would be saturated, you can say. So it would be stopped at one point in time. So therefore you would not be able to grow with the same speed which you are doing at the moment. So you can say it will negatively impact in short.
Okay sir.
Yeah. So what kind of exchange rate does India follow? Yeah, India follows floating, right? But one thing you need to remember, even when the countries follow floating exchange rate, they do have foreign currency reserve. You would have heard these news or would have seen these news in quite often. India has got reserve increased by this and this and all those things. So every country, no matter if they're following the floating exchange rate regime, or they're following the fixed exchange rate regime, they have some level of exchange foreign reserve to so the central bank at times do control a very high fluctuation in the currency. So no country is ready to deal with the high fluctuation in the currency. And if that may happen, or there, and if that looks to be a scenario to the central bank, central bank can pitch in and control the situation with the help of the foreign reserve which they have. Okay. Yeah, tell me any other questions you have.
Sir,
No,
reserve
sir.
currency board.
Yeah, the
Sir,
reserve currency board is like, reserve currency board is like your, it's more like the fixed currency only. So wherein, when you talk about the fixed currency regime board, right? So fixed currency is where the central bank of the country is going to make the currency fixed vis-a-vis the foreign currency. However, in case of reserve currency board, so there the board like IMF, right? So they are the one who actually manage the currency of manage the currency of the country which are unstable, which themselves as in the countries which themselves are not capable of managing the currency fluctuation or the instability of currency is not managed by themselves. So there, these reserve board like IMF plays a role of controlling the currency, and it is fixed vis-a-vis the strong currency like US currency, and then all works in a very same manner like it works in case of fixed currency. However, in fixed currency, the central bank is the one who is taking the control of the currency regime. In this case, it is the reserve board like IMF is going to take control of the currency of a given country, and therefore they will not be allowed to print notes to manage the situation. They would not be printing notes. They would be having the foreign reserve with them, and that foreign reserve would be used to manage the currency of that given country, as in the fluctuation which is happening. So that would be managed with the help of the reserve, the reserve which they have created. So that would be used to manage the currency, and at the same time, as this currency of this given country is pegged with the currency of the powerful currency like US currency. So if there is any changes happening in the US, so that will also be reflecting in your in the currency of that given country. So that can negatively impact if they increase the rate. So this country will also increase the rate proportionately to manage that peg or that manage that same same standard, you can say, right? So therefore it can negatively also impact if the country is already going through a difficult time, and to avoid that, as in to avoid the problem, they're fixing the currency, right? And if the foreign currency is increased, so then it can cause more worries for the local currency. So this is about your currency reserve board.
So who's the
Okay.
regulating body for FX?
FX, as in there is no such body. It's the central banks who are responsible as publishing, especially in India. Reserve Bank publishes this rate. Mostly these are central bank. Every central bank in the in every country, they are the regulators for currency.
So ऐसा कोई मतलब इंटरनेशनल बॉडी नहीं है जो इसको रेगुलेट करती है?
नहीं, इंटरनेशनल बॉडी नहीं है.
तो
There is no
FX जो
such
रेगुलेट करता है वो
There is no,
जो सेंट्रल बैंक्स होते हैं.
yeah. Central bank are primarily responsible for regulating this FX. In India, it is RBI. Similarly, in other countries also, the central bank, because currency is something which is directly coming from currency is it's coming from the central bank. So central bank need to take complete control of the currency. So that they have a very clear view about how the economy is doing. So that is one reason why there is no international regulator for foreign exchange as of now. It is an OTC product, but it's in terms of the regulation, it is your the central bank would be the regulator for the currency. Okay.
Okay, sir.
And okay, what about collateral management? Who would like to explain about collateral management? Anyone aware about collateral management? Anything? Because Ayushi is asking if we can share some, as in we can explain collateral management briefly.
Sir, I would like to try.
Okay, go ahead. Sure.
Okay, so collateral management basically is that process when two parties are trading, trading. There is one party A and party B, and there is a portfolio of trades between them on which they are trading. So that portfolio of trades are like valued on a daily basis, which can we can say like on mark to market basis. So the trade's daily valuation is calculated, and one collateral is kept between them, and that collateral is also valued on mark to market basis. So in this case, one party is always positive and one party is negative. So this management of the portfolio of trades and this collateral on mark-to-market basis is called as collateral management. So if the party which is positive, we can say is in the money or is having profit, so he'll make a call to party B, which is called margin call, to like transfer the amount of profit which he has gained on that particular trade on that day. So this exchange of collateral between them and the profit on the trades is called collateral management.
Yeah. Right. So collateral
So can I
management.
back?
Yeah, Lavish, go ahead. Go ahead.
Sir, collateral management is a process of two parties exchanging assets in order to reduce the credit risk, which is associated with any unsecured financial transaction between them. Suppose these are two parties,
Yeah.
which are exchanging there's a bank and a person who is taking a loan, and for the collateral purpose he is uh, giving the collateral a property, and taking deposit from the bank. Or these counterparties basically involves banks and brokers और dealers भी involve होते हैं इसमें, insurance company भी involve होती हैं, और assets managers भी maybe शायद they are also involved in these types of transactions. And so collateral हम कैश भी रख सकते हैं, गवर्नमेंट सिक्योरिटीज भी रख सकते हैं, एंड इक्विटीज और लेटर ऑफ क्रेडिट वगैरह.
Good.
And हाँ सर.
Yeah, good. So both of them spoke quite well in terms of the understanding, right? So so collateral management is a process wherein you are managing the collateral which you have got on the back of the trades that you're doing with the counterparty. So you are doing trades, and those trades have maturity or expiry in future. So when I say maturity in future, means when they are going to mature in future, so that means they are going to settle in future. So as long as those trades are not settled, you are having a risk on those trades. In a sense, you don't know if the counterparty will be fulfilling its obligation at the later stage when the trades are due for settlement. So that is a risk which one counterparty has against the other counterparty. Similarly, the other counterparty will have with the first counterparty. So this risk is there when one party is trading with the other party. So collateral management is a process of managing collateral that you are exchanging with a counterparty on a daily basis, as we discussed. So how are you going to manage it? So you would look at your position which you are trading with the counterparty. You would see the portfolio of trades that you have got. Maybe you have 100 trades in a portfolio, and those trades can either be in your favor. When they are in your favor, so you would be calling you are in the money, out of money, right? These are the terms that we discussed in the derivative chapter. So when you are in the money, so that means you are in profit. And if you are in profit, so you know for that given day you have a risk, because you see a profit in your favor. However, if you don't take an adequate or proper amount of collateral from the counterparty, then if next day counterparty does not agree to settle the trade which is there, which is the underlying trade, so then you are going to lose the money. You're going to have a bigger loss. And this is something which is happening on daily basis, right? So your trade, you're going to have those trade valued on a daily basis. So you might have more profit, you might have more loss on those trade. If you are having loss, that means you are in negative. So negative denotes to loss. So you are supposed to pay collateral to your counterparty. If you have positive, that means if you are in profit, you would be calling your counterparty to post collateral to you, and that collateral is not yours, it is the counterparty's collateral. So when your trades are to settle, then you would be returning those collateral back to your counterparty, and you would just be receiving the profit that you have made on those trades. So the collateral that you are having on the trades on a daily basis is only for managing the risk over the period of the settlement. So until the settlement actually happens, so that collateral would be kept with the counterparty who is in profit on those respective days till the maturity of the trades. So that is how your collateral management as a process is done, right? So that's we as an discussed while we maybe maybe it is clear, Ayushi?
सर एक प्रायोरिटी रिस्क इसमें कोलेट्रल में होती है, वो कोलेट्रल को इनएलिजिबल कैसे करती है?
Priority risk is ineligible कैसे करती है, क्या क्वेश्चन कहता है?
यस सर, उसमें पढ़ रहा था एलएमएस पे, तो उसमें थी।
हाँ, क्या था क्वेश्चन, क्या था
सर? ये प्रायोरिटी रिस्क बेसिस पे कोई इसमें होती है, जैसे कि मोर देन वन से ज्यादा पार्टी उस पे अपना वो क्लेम करते हैं कोलेट्रल पे, तो सर वो उस सेंस में कोलेट्रल इनएलिजिबल हो जाती है।
Okay, so this is priority risk is like when you are dealing with multiple counterparties, right? So there is a possibility wherein you have defaulted with one counterparty, right? When you're defaulted with one counterparty, so and there might be chances that that default looks quite apparent to the other counterparty also, right? The default which has happened with one counterparty, that may become apparent to the other counterparty also, that you can default with them also. So to avoid such default, so counterparty would be claiming, right? They would be claiming the collateral from you, or they would be claiming the profit or profit that has been made on the trade. So profit would be claimed in the form of collateral only. Either you give collateral or you settle the trade. So that will happen between the counterparty, right? So that is in a sense referred as priority risk. So priority risk would be for the counterparty who is a default. So they would be deciding who they are going to give more priority in such instances when they look to be in a situation of default. So who they're going to prioritize, who they're going to give more priority in settling the trade, right? So that is termed as priority risk, you can say.
सर रीहाइपोथिकेशन में इस तरह की प्रॉब्लम आ सकती है क्या?
Yes, rehypothecation is if you have rehypothecated your collateral, and if that counterparty defaults, then you can say your rehypothecated collateral is now gone into problem. So your collateral is with the counterparty, and that counterparty which is holding your collateral in the rehypothecated form, and if they go into default or a bankruptcy mode, so there is a very strong possibility that your collateral, which is a rehypothecated one, that's not yours, so that will also be that will fall into tussle, legal tussle and all those things, and therefore it can become a problem.
Sir, could you please elaborate on the possible reasons of dispute in collateral management?
Yeah, so disputes can be categorized like in three forms. One is on the collateral, right? So the collateral which parties are exchanging between them. So dispute can be on the collateral also. That's one. Then it can be another is the dispute on the valuation of trades. That is the mark to market of the trades, right? And or you can say the pricing of those trades. That's another. And then there could be a discrepancy in the portfolio. So we'll talk about three of them. First, let's talk about the first one, that is the collateral dispute. So how come there be a dispute on collateral? So let's suppose you have holding 5 securities from the counterparty in the form of collateral, and if the rating of those securities change overnight, if the ratings of those securities change overnight, so that means those securities will fall in its value, and if those securities fall in their value, so then the counterparty, as you as a counterparty, would be calling for more security. So that is going to be one dispute area, wherein you would be requesting counterparty for posting more security. So that can cause dispute. You would be saying, I need more security. Counterparty would be disputing. They might not be seeing it the same way as you see. So that's one. Then when you talk about the valuation of your trade on which you are doing the collateral management, so you see a certain value of your trades at your side. Similarly, the counterparty see a certain value of their trades at their side. So that is basically coming from a certain source system. So source system can be Bloomberg, it can be Reuters, it can be market. Those source systems are used. So whatever data is being sent by them, that is what is consumed by the party, and basis that you are reflecting your mark to market. So if there is any feed issue, or maybe not feed issue, any data which is sent by the source system is incorrect, so that would be causing a dispute between party and the counterparty. That's one. Another is there are certain methods which are used for doing the valuation. That is called valuation methodologies. If those valuation methodologies have got some problem in them, or maybe those are not clear to the counterparty, so that may lead to dispute. So one counterparty is not clear with the methods which you are using at your level to valuing those trades, or you have changed some method which you notified to the counterparty, but counterparty is not aware about them fully. So that will lead to confusion. That will lead to dispute, right? And then this is on the valuation side, and the last is discrepancy in the portfolio itself. So you have got 10 trades, counterparty has got 9 trades in the portfolio, so that can cause a dispute in the mark to market value, right? Because you are valuing only 9 trade, the counterparty is valuing 10 trades, so that would be dispute. So why they're valuing less? Maybe they have a map that the 10th trades against some other portfolio due to some mistake, right? Due to some mistake, they have mapped those trades somewhere else, and you have mapped it correctly, or maybe you have mapped it incorrectly, counterparty has mapped it correctly. So that may cause a dispute in the trade. So if the number of trades are less, so the mark to market for those trades would be different for sure. Then also at times, so when you're trading with the counterparty, you are doing the netting, the counterparty is not doing the netting, and therefore there may be some issues in the valuation of those trades again, right? So these are the fundamental broad, the reasons of collateral discrepancy or collateral disputes, right?
Okay, sir.
Okay. Okay. Any other question as of now?
No, sir.
Okay.
Sir, order drive and code drive.
Yes, sir.
Which one? Order
Drive and code drive.
Code driven. Okay. So there are
Yes.
two different market we have, right? So one is your order driven market, and another is code driven market, and then there is third is a hybrid market also, which caters to both of these. So the order driven market, you can say, is the market which is which has which is having orders and which considered to be more transparent in the form you have visibility about all the orders which are placed in the order driven market, right? So order driven market is where you can see the orders placed by the investors, and those orders are visible to the investors. So that kind of a market is considered to be more transparent, and that is called the order driven market, because it is coming from the order, as in the orders are seen by the investors. So that is why such market are termed as order driven market. There the quantity, price, every detail are seen to the investors, so thus the market is named order driven. On the other side, the code driven market is the OTC market. So order driven market is exchange market, you can say. Exchange market are called order driven market because you can see those orders on the exchange market. On the other hand, when you look at the OTC market is called this code driven market. So the code driven market is where you are going to the broker or dealers who are in the market, or market makers, you can also call them market maker. You ask a particular trade, and they are going to give you a quote. They will be giving you a quote or rate, whatever you want to say. So that quote would be provided by the market makers. So that is what would be applicable for you. You might negotiate on the quote and might agree a different quote basis your negotiation with the counterpart, with the market maker. The market maker is ready to give you a different quote, or are comfortable giving the quote which you are quoting. So that is a different matter. But given this market is such wherein whenever you want to go for a trade, you're going to ask the market maker or the big player who are there in the OTC market for those quotes. So the quote would be given to you, and then your trade would be executed, and therefore it would be called the quote driven market, or the OTC market, you can term it in other words. So it is your quote driven market. So that is how these two markets are differentiated. One is your order driven market, another is the quote driven market. Quote driven market is more transparent in terms of the orders are visible, and but the orders execution is not guaranteed in the order driven market. The reason is very clear, because order can only be executed when your order is matched. If the order is not matched, order would not be executed. So you have this liberty of putting your order with your, as in with your choice, with your price, and but the guarantee of order is not given there. Here, when you have confirmed, agreed with the quote, the guarantee of your order is confirmed in OTC market, but the settlement is not guaranteed in the OTC market. Settlement is guaranteed in the exchange market. So these are the certain features of the order driven market and quote driven market. You can say settlement is guaranteed in the order driven market, and in quote driven market the settlement is not guaranteed. And in terms of the execution of the order, that is not guaranteed in the order driven market, but in quote driven market the execution of trade is guaranteed. Then the transparency, when you look at from the transparency point of view, so your exchange market, the order driven market, is more transparent compared to your quote driven market, because there you don't see those orders which are available in the market. You can just be just be able to negotiate with the market maker on the quote which are offered to you. You can either agree to the quote, you can negotiate, you can disagree, you can not do trade. All those options are available at your disposal, but you cannot put your own order. You will have to go with the quote which is given to you. Clear?
सर ऑर्डर ड्राइव में जस्ट लाइक इस टाइप से होती है कि जैसे मैं कि सेलर हूँ सर, मुझे सिक्योरिटी बेचनी है, तो सर मैं अपने अकॉर्डिंग एक्सचेंज पे सिक्योरिटी का रेट फिक्स करता हूँ और जो खरीदना चाहता है वो अपने अकॉर्डिंग रेट लगाएगा, उसके बाद मैच किया जाता है एक्सचेंज के थ्रू.
Right. So yeah, right. This is how the order-driven market works, wherein you can place your order with your choice, as in the price, quantity, everything you can decide when you place your order. But you need to always bear this thing in mind. You cannot go below that. There are two things. One is your upper circuit and lower circuit. The two things are there. Upper circuit means you cannot just cross that upper limit of upper price on a given day. You cannot go below the lower circuit number. Lower circuit, these are decided by the exchange only. So these two prices you need to take care of. You cannot breach these prices. Otherwise, you can place any price in between those upper circuit price or the lower circuit price. You can place price of your choice and the quantity of your choice.
Sir, so can I go? So actually my health is not good. Fever है sir, तो
Okay, no worries. You can leave in case not feeling good. So I'll suggest you take rest and stay safe, right?
fever है, सर vomiting वगैरह भी हो रही है, तो इस वजह से ठीक है.
No worries. So take rest, I would say. Rest and get well soon. This is when I said.
Mock Sunday है ना sir?
Yeah, mock is on next Sunday.
Okay sir.
Yeah, coming
so please
Sunday.
mark my attendance also.
Okay, no worries.
Thank you sir.
Okay, welcome. Take care. Okay, so I hope that's clear.
Yes sir.
Okay. So any other questions you have? I do not want to go chapter wise because otherwise it will take a lot of time, and probably I first want to take your questions. So if you have questions, you can ask. Otherwise, yeah, go ahead.
FX forward and non-deliverable forward.
Okay, so FX forward and non-deliverable forward. So these are two, two products that we have in the derivative segment. So FX forward, how does it work? And if you look at the technical aspect of these two instruments, which look very similar in nature, and however, the only difference is when you talk about the FX forward and non-deliverable forward. So non-deliverable forward is meant for the currencies which don't settle, which are not allowed to be tradable, right? For the non-tradable securities, this non-deliverable forward concept has been brought, and for the currencies which can settle on a global platform, so for them the currency forward is there. So let's look at some of the example. You have one counterparty based out of US, another counterparty is based out of in UK. Okay, you have one counterparty based out of US. Let me just also try to explain it within an Excel file if possible. Give me a second.
And sir, after this, can you explain the example of speculation in FX from the PPT which is given on LMS?
Oh, okay. No worries. So let us go with this one. Okay,
Sir,
so if you look at here,
Sorry.
okay, let me just explain here. So let us take the scenario. Okay, so there is party 1, right, and this party is based out of USA, and there is another party, that is party B, that is based out of UK. This is in UK. So these two parties are dealing with each other. Okay, and party B is taking maybe uh, Apple phones from party 1, right, and the contract, right, you have a contract of Apple phones worth $10 million, whether I would say 10 million pounds, not dollar, right? So let me write GBP, 10 million pounds, so that's GBP, right? So this is the contract. Here the party A or party 1, rather let me make it A, party A has decided to sell Apple phones to party B, which is 10 million pound in the value, and this payment is going to come at t equal to 90 days. So when this payment is going to come, when after 90 days, you can say after 90 days, payment after 90 days. Fine. So this is the case here. Okay. So now what will happen? What are the issue with such contracts? So such contract, when you do with party B, and where the party A is based out of US, the party B is based out of UK, so you're going to make this contract in the local currency of the party B, which is GBP in this case. So the payment is going to come in GBP, but you're going to convert that money in your home currency. That's the home currency for party A, which is US currency in this case. So they would be having some issue with the currency exchange rate. If the currency exchange rate fluctuates, then it can be a problem for them, right? So let's say right now the 1 GBP is equal to 1.30. Okay, that's the current rate, or you can say spot rate. The spot rate is this: 1 GBP is equal to 1.30, and if the spot rate becomes 1 GBP equal to 1.20 at t equal to 90 days, right, then it is a problem for whom? Will that be a problem? Yeah.
So it will be a problem for party A.
Yeah. Right. It will be a problem for party A because party A is going to get less money compared to what it could get with a FX rate of 1 GBP equivalent to 1.30. In this case, when the spot rate becomes 1 GBP equal to 1.20, which is we're discussing at T equal to 90 days, so then the party A would only be able to get $12 million compared to $13 million they could have got with the spot rate being 1 GBP equal to 1.30 at T equal to 90 days. And that means after 90 days. So payment is going to receive. So if you look at such trades which happen with one party to the other party based out of different countries, so the payment usually does not come the same day. Payment usually comes over some days, months, or weeks, that way, right? Same is the case here. Also, the contract has been signed, and the contract worth is also given. It is 10 million worth in 10 million GBP. That's already agreed in the beginning only. So party B is just going to make this payment, that is 10 million GBP. So the party A, what party A will do? Party A will reach out to bank A, right, and they will say, can you offer me 1 GBP is equal to 1.30, because that's the spot rate, right? That's the current spot rate when they are actually signing this contract. So the bank may agree to this rate or may not agree to this rate, depending upon what they think about the situation, and if they're comfortable offering the same rate which the party A is willing to or is keen to get, right? So that depends on bank A. If bank A is comfortable with a rate which party A is wanting, and if that is the case, then they can agree with the same rate. So here we assume like the party A is able to get the same rate, which is 1 GB equal to 1.30 USD. So now whatever happens at T equal to 90 days, right, party A is going to receive 10 million. So how this will happen? Party A will hand over 10 million GBP which they receive from party B to bank A. Okay, and bank A would be giving 10 million, no, sorry, not 10 million, 13 million USD to party A. So that is how the settlement will happen in the currency forward in this particular example, right? So in this example, the settlement will happen in it will happen with both currencies, as in at one hand party is going to deliver one currency, on the other hand the party bank A is going to give the other currency back to the party A. So that is how the settlement for the transaction will happen. Now look at the same case from the point of non-deliverable forward contract. So non-deliverable forward contract, as we discussed, is used when one of the currency is not deliverable currency. One of the currency is not a tradable currency, you can say. So let's make it party A is based out of US, party B is based out of India. Okay, party B is based out of India, or rather I would say party A is based out of India. Okay, let's let it be US only and India. So what will happen now? So party India, when you look at from the party B point of view, which is India here, India is let me change here only. Let me make it because okay. So party A is an Indian party and party B is an US counterparty. So let's say see you uh, do a contract of providing some some service to US based counterparty. Counterparty A agrees to provide some kind of a service to party B, and in return they are expecting a certain money, which is you can say service provided to party B. In return, expected, uh, 10 million pound or 10 USD, USD 10 million after 90 days or 60 days or 30 days, whichever you can make it as per your convenience. Right. So now the spot rate at the moment is 1 USD is equal to INR 70. Okay. 1 USD equal to 70 INR. That is the current rate. Fine. So how much money you're going to receive with this rate as party B, party A? Party A is going to receive how much? 10 million. Multiply by 70, right? So this is the amount you're going to receive. This is your 7 crore, right? 100,000, 10,000 lakh, 100,000, 10,000 lakh, 10 lakh, 7 crore. 7 crore is the amount which party A is going to receive if they receive with the same spot rate, which is your 1 USD equal to INR 70. So the figure is same. Maybe this number changes. So they reach out to bank A and discuss, what can be offered to them. So assume like the same rate is offered, that is 1 USD equal to INR 70. INR 70. Okay. So what will happen now? What will happen now? Any idea? What can you think of? What will happen? Anyone?
The party A will reach out to bank here and fix its payment. Like he'll make sure he receives at the rate of 1 USD equal to 70 INR only.
Right. Okay. So let's make a situation. Let's make a situation wherein 1 USD becomes how much? 69 INR 69. What will happen then?
So here the bank fixes the USD, the INR to 70 rupees only. So if the value goes up or down, if the value goes from 70 to 69, the loss will be paid by the bank. And if it makes profit, if it goes up, like if it goes to 71, then the profit will be of bank only. So the profit or loss will be paid by bank only. in this case.
Yeah, right. So the loss and profit would be borne by, bank A only. And in this case, the bank would be giving, bank A is obligated to give the, as per the agreed amount, whatever they have agreed, so they are going to give it to the party A. And then it will be settling in USD only. So there would not be a exchange of INR. That is there would be no exchange of INR with the bank, right? So bank would be settling in only one currency, that is your USD. Then you would have to, party has to exchange that USD in the outside market with the available exchange rate. So that is how this will happen, but the technicals will remain same. Okay, so that is how your non-deliverable forward work, and forward, both non-deliverable forward and the currency forward. Okay. Okay, so now the time is 5:55. So let us take 10-minute break now, and then we'll resume with the rest of your questions. Fine, guys.
Okay, sir.
page. Okay, so I hope everyone is there.
Yes, sir.
Sir,
Yeah, so let us continue with more questions now.
Sir, in this example which you explained just now,
That are
what?
bothering you, do not show up.
Hello, am I audible?
So this non-deliverable forward is clear. Any confusion there? Pranav?
Sir, I have a question.
Pranav, you're not audible. I can't. Hello? Audible?
yes, sir.
Okay. Okay, fine. So yeah. So this example is clear. So the fundamental difference between the forward, the currency forward and non-deliverable forward is this, wherein you see when you look at currency forward, both the currencies are exchanged. Party A gives GBP, right, and then party bank A gives the equivalent USD amount, right? So both the currencies are tradable. So both the currencies are exchanged. Here, only one currency is tradable, which is USD. INR is not tradable. It can be exchanged from the dealer and all in the in that country, but you cannot you know you cannot trade it. So what will happen? You would be getting USD only at the end of the day, and you would be able to exchange USD in outside in the
Sir,
in the foreign in the open market and get the equivalent INR. Yeah,
sir,
go ahead.
sir, can you please explain non-tradable currency and tradable currency difference between these two?
So, like when we look at as in uh, the currencies which the global currencies like USD, Euro, right? Uh, New Zealand dollar, Swiss currency, Swiss franc, right, and JPY. These are all tradable currency. And the emerging market currencies, the Asian currencies, except JPY, most of the currencies are non-tradable. Like INR is not tradable, and Thailand currency is not tradable. Philippines currency is not tradable. Even Chinese currency is not tradable, right? So similarly, other than Japanese yen, the mostly Asian currencies are not tradable. So these currencies are not exchanged between the banks. So they only exchange currencies which are tradable. So here, like the example that we were talking in this party A against bank A. So when they are trading, so they would be receiving, party A would be receiving USD only, and that USD they would be able to exchange in the market and avail the equivalent INR amount. So if in case the USD value depreciate or is reduced due to change in the market currency rate, so bank is going to give you equivalent number of USD which you can use to exchange in the market and avail the local currency. So you are not going to give your USD to the bank A. Neither bank A is going to give you INR, right? So what will happen? You would only be receiving either the difference of USD vis-a-vis the agreed the agreed number that you have agreed in the beginning with bank A. So like the example that we discussed here, right? US1 USD equal to INR 69. So we can clearly see if this is the case. So bank is making loss, right? So bank is going to pay you enough USD which can be redeemed against the loss that you are having on the position. So if the INR becomes 69, so very clearly you can see with 10 million USD you would only be able to get 6 crore 90 lakh INR. So the remaining 10 lakh INR equivalent USD would be given by bank A, and that USD you would be able to redeem in the market, in the open market, to cover the loss that you have got. Got it? Okay,
Yes, sir.
fine. Any other questions you have?
सर ऑप्शंस में ये काफी कंफ्यूजिंग ये चैप्टर मुझे लगती है सर. इसमें जो ऑप्शन शॉर्ट पुट, लॉन्ग पुट, ये शॉर्ट कॉल, लॉन्ग कॉल, इन सबको सर एक एग्जांपल के हेल्प से एक बार समझा देते हैं.
So let us start with an example only. So let's 1 second. Give me.
So forwards, non-deliverable forward settlement process. Can you explain it once?
Okay.
The process of settlement.
Yeah, the process of settlement would be like, so when you have agreed with the bank, like this is the party A and this is bank A. So here the rate you agreed with the bank is 1 USD equal to INR 70. So that means if you have a contract of 10 million with party B, wherein you are going to receive 10 million USD from party B, so with this forward non-NDF contract that you have signed with bank A, you are supposed to receive 7 crore money, 7 crore INR, right? So how does it happen? So you are not going to, you're not going to receive this 10 as in 7 crore from bank. Bank is not going to give you any INR money. So you would only be receiving USD in this transaction, and USD you would be exchanging in the market, and you would be able to you would be having the equivalent INR amount. So here the contract has been that you are supposed to receive 7 crore. Now I have taken a case wherein 1 USD becomes INR 69. So how much would you be getting by converting your 10 million USD in the open market? You would only be able to get 6 crore 90 lakh rupees, right? With the rate changing in the market, with the open market, you would be able to avail 6 crore 90 lakh when you convert your 10 million USD that you receive from the counterparty. So the difference is 10 million. That difference, who is going to bear the difference? The difference will be borne by the bank A only, because bank A had agreed to give you the rate with 1 USD equal to 70. This is the rate agreed by the bank. So how much? So 10 million is the deficit. So 10 million, 10 lakh, I would say, rather. 100,000 and 10 lakh, 10 lakh, divide by 69. Okay. Right, this you will divide by 69, because 69 is the current rate. So that is the USD amount. In excess of this amount would be, who will bank pay to you? So what amount bank will pay to you? This amount will be paid to you. What is the number? 14,492 USD. Right? This will be paid to you by whom? Bank. Got the point here? So what I'm saying?
I have fixed with the bank at 1 USD equal to 70 INR.
Yes.
Then
Yes.
bank should be at a loss.
Yeah. So bank is going to give you how much USD? Because I said like the settlement will happen only in the tradable currency. So what's the tradable currency? We know USD is the tradable currency, right?
USD. Yeah.
So bank would be giving the deficit of, as in the deficit will happen of 10 lakh in when the rate becomes 1 USD equal to 69. I'm taking the settlement, right? So settlement is will happen at 1 USD equal to INR. You would be able to convert your $10 million that you receive from the party B in the open market, and you would be able to avail the proceeds, the equivalent proceeds. The equivalent would be 6 crore 90 lakh. But you were supposed to receive 7 crore, right? As per the rate, right? You were supposed to receive 7 crore because your rate agreed with the bank was 1 USD equal to INR 70. So as per this rate, you are supposed to receive 7 crore rupees from the deal. So you are receiving only 6 crore 90 lakh rupees. So the remaining 10 lakh rupees would be given by bank A in USD. The remaining 10 lakh rupees, right, would be paid in USD. So how much they would be paying? They would be paying with the same rate. 69 is the rate. So 10 lakh you divide by 69. So that will be your as in the USD number. So 14,492.80 cents, you can say, is the USD figure that would be given from would be borne by bank A, and that would be handed over to party A by bank A, and therefore they would be able to get the same number, the same 7 crore would be in the hand once they exchange the remaining received amount from bank A in the open market, and they would be able to make it to 7 crore which they were expecting to receive at T equal to 90 days. Got it? Any confusion here with settlement? Anyone not clear with
Yes.
settlement? Anyone
Sir,
else?
and the uh, date, I mean, there was something regarding delivering the forward contract like T+3. What was that, sir?
So that is yeah. So in FX you have differentiated. Spot would be same day. Rather I would say cash. Cash is same day T. Okay. Then you say spot is T plus 2, right? T plus 2 is your spot. In FX, in the world of FX, we have got different. Then you say forward, anything greater than T plus 2, that will be forward, right? So that is how these different terminologies are used in the FX world. So cash, when you transaction for a same day, so that is called cash transaction. When you have a transaction for T plus 2 or T plus 1, that transaction is named as either spot or Tom. Tom you would have also heard. Tom is for T plus 1. Tom means tomorrow. Spot is T plus 2. So these are the different different terms or terminologies which are used in the FX world to distinguish what kind of trade is this. If this is the same day trade, if it's a T plus 1 trade, if it's a T plus 2 trade, so that's a different names have been given. Anything greater than T plus 2 would be called a forward trade. Okay. Okay, now I guess okay, option, right? So let us do some of the option now. So let us take an example of a stock. Let's see, this is stock ICC Bank. This is ICC Bank stock, and the current price or the spot price is 640. Okay. Now, when you look at options, have, one is your call option, another is your put options. And when you look at the definition of call option, as in the option says it gives a right to buy or sell. It gives a right to buy or sell an agreed asset at an agreed price at a future date. This is the definition of option. Okay, so the call option either gives a right to buy or sell an underlying asset at an agreed price at a future date, or at a specified future date, you can say. So that's the definition. Now when you say call option, so you have, now you're going to buy this strike. When you say call option, you're not buying anything, you're buying the different strikes. When you say strike, means different price, you make idea of those price, as in at what level a stock can reach. This is what you decide or calculate at your level, and accordingly you buy those strike. So in case of a call option, let's say you take a strike of 650. So right now the spot price, as in the current price of stock, is 640. You take a strike of 650 and you buy a call option. Buy a call option. So as per the definition, call means you have a right to buy when the stock goes 650 or beyond. If the stock reaches 650, then you have a right to buy at 650, or if it reaches 660, then also you have a right to buy at 650 only. So I hope you are making it now, you are able to relate it. When I say the option has a right to buy or sell, sell is in case of put, buy in case of call. So buy at an agreed price. So agreed price here is the strike price only, at a specified future date. So options have a maturity of 1 month, 2 month and 3 month. So at a specified future date means whatever expiry you have taken for that option, that would be the specified future date for the option buyer. So let us take, it's a 30-day option contract, right? So if t equal to 30, that means on expiry, t equal to 30, that means at expiry, if the price is 650 or above, let's say 650 or 652, or let's make it 657, three prices I take. What will happen in these three prices? What will happen? What do you think will happen? And at the same time, just give me a second. One
So
more thing,
65
and you pay a premium of because when you buy something, when you buy a right, because it's a right to buy something at a certain price, so you would be paying some premium also. Nothing is coming for free. So we take in a case, the premium that you're paying is 5 rupees per share, and the lot, this options trading always done in lot, call option lot size, lot size is how much? This is 31375 in case of ICICI Bank. So now, yeah, now we have got these three conditions here at t equal to 30 days at expiry. So if your the price of the stock is 650, what will happen? The price of 652, what will happen? And when the price is 657, what will happen? Who would like to? Gaurav, yeah?
Yes sir.
Yeah, go ahead, Gaurav.
सर 65 पे इसको मिलेगी ना सर, 650 पे सर,
हाँ,
क्योंकि अकॉर्डिंग टू ऑप्शन ये प्री डिफाइंड है कि मतलब 650 से ऊपर जाए तो फिर भी 650 में मिलेगी, तो इसलिए 650 पे इसे इसको मिलेगी फिर.
So as if option buyer has this right to execute this option trade at 650, but given the option is beneficial only when it crosses 650 level. If it remains at 650, as in at the end of maturity or the end of the expiry, if the option does not move above the strike price, then it would not be having any value. So it is it is not going to be profitable for the buyer, right? Because buyer has agreed to buy the underlying at a strike of 650, but if the rate is same in the open market also, which is 650, so will it be beneficial to the buyer? What do you think? Will it be beneficial?
सर रेट जब इंक्रीज कर रही है तब बेनिफिशियल होगी, जब डाउन कर रही है फिर तो खरीदना सही नहीं होगा सर.
So if it is 652, second case is the price is 650, so 52. So will it be good to execute now?
Yes, sir.
Okay, right. Okay, so what will happen in this case? Will it be how much profit or loss the call option buyer would be making here when the price of the underlying stock is 652?
तो 2 यूनिट का प्रॉफिट होगा सर इच शेयर पे.
Yeah, 2 unit का profit होगा, right? But that is when we look at from the share price, it is a 2 unit profit, but there is also loss of 5 because the premium that you are paying is 5 per share, right?
Yes,
So
sir.
in total, you are making a loss only. How much? 5 minus 2, right?
Right, sir.
So in this case, the net number would be loss for the buyer of the call option, because you're going to make a loss of 3 per unit. So 3 per unit is 3 multiplied by 1375. So that is the total loss which the buyer is going to incur if this remains the situation at the expiry, right?
सर ये जो
1375
प्रीमियम है पर यूनिट शेयर के लिए 5 यूनिट है, 5 यूनिट है क्या सर?
Yes, 5
Oh, the
per
loss.
5. Yeah. So the
Yes, sir,
loss
समझ
of
गया.
4125 will happen because premium is 5 per share, 5 per unit you can say, and number of unit in one lot is 1375. So the total loss is 3 rupees per unit. So total loss in number comes, as in the actual amount comes out for 4125 rupees, right? What will happen when share reaches 657?
4 यूनिट प्रॉफिट होगी सर.
4 unit. How 4 unit किस तरह से निकाला?
7 minus 3 सर.
7 minus 3.
क्योंकि सर 650 पे वो स्ट्राइक प्राइस है, तो वो करंट प्राइस उसकी 657 है, तो 657 माइनस 650, तो 7 और 3 पर शेयर सर इसकी ये है 5 प्रीमियम है, तो 7 माइनस 5 इक्वल टू 2, तो प्रॉफिट 2 यूनिट होगी सर.
हाँ 2 होगा, राइट, क्योंकि 7 आपका प्रॉफिट यहाँ से निकल के आ रहा है शेयर से, राइट, because the share value has risen to 657, so 7 rupees profit is there, and at the same time the premium that you are paying is 5 rupees, so 7 minus 5, that means the profit is 2 rupees per unit, so total is 2 multiply 1375, so that is your profit that you're going to make on this when the share price is 657 the maturity. Okay.
Yes, sir.
So these 3 scenarios are for the call option, and similarly we can have put option also, right? So put option, we say you have taken a strike of, let's say the strike is 630, 630. Premium is, let's make it same, 5 rupees. Okay. So now what will happen? if you have these three conditions, one 630, right? Another is your 630, 627. Another is 621. Right. So what will happen when your um, as in the share price becomes 630 at maturity, or it becomes 627 at maturity, or it becomes 621 at maturity? So what will happen in case of put means you have a right to sell the underlying at a given at an agreed price at a specified future date. That's the definition of call option when you are having put call option. Okay. So what will happen when the underlying is trading at 630? Will there be any profit?
नो सर, आई थिंक यहाँ पे तो तीनों कंडीशन में लॉस होने चाहिए.
Yeah. The first condition is the complete loss. Loss of rupees 5. 5 per unit means 5 multiply 1375. So that's the loss. 6,875 would be the loss. That means the entire premium value is lost. Right? When it is 627. So is this loss? How much?
Yes, 8 rupees, sir.
No. Because you are able to make 3 rupees from the put option, but you're paying 5 rupees for as in the form of premium. So your loss is 5 minus 3. 5 minus 3. So that is 2 rupees is the loss. That means total loss is 2 rupees 2,750. That is your loss in the second case. Right? Because this is a put option. This is not a call option. In the put option, the buyer of the put option is in profit when the share value moves below the agreed strike price in the put option. In the put option, if you have agreed the strike price is 630, so if the option starts going below that agreed strike price, so that is when the put option buyer starts making profit. So at the one side, when you see the value of the put option goes below, as in below 630, so you are making profit. So in this particular example, when it is 627, you're making a profit of 3 rupees on put option, but you have also paid a premium of rupees 5 to avail this put option. Therefore, 5 minus 3 is 2 rupees only. 2 rupees loss you are making, and that therefore the total loss in rupee terms would be 2,750. That's the loss. And in the last option, so what will happen? Will it be profit?
इसमें 4 यूनिट की प्रॉफिट होगी सर.
Yeah, 9 minus 5. So 4 rupees is your profit. So the total profit in rupee terms is 5,500 profit you're making in the last case when the share price is at 621. Okay.
Yes, sir.
How is it making profit?
Yeah.
How come it is making profit here?
In the last case.
Yes, sir, put option.
Yeah. So the put option, as per as in the definition says, he is the put buyer, right? So the buyer makes profit when the value of the put option goes below, value of the underlying share goes below the strike price. So what is the strike price? Strike price we have taken 630, right? So you have agreed to sell at what rate? You have agreed to sell at 630. So if you sell at 630, so you would like to buy it at the cheaper rate, right? And that is how you make profit. You buy at the cheaper rate and sell it at a higher rate. The difference is your profit. So if the value of the share goes 627, so you would be able to buy at 627 and would be selling those shares at what rate? 630, because that is what you have agreed in the put option contract with the with put option seller buyer, with the put option seller, right? So that is how you're going to make profit here. Similarly, in the last when the share price becomes 621, so you can if you look at from technical point of view, you can buy share at 621 because the market price of the share is 621 at the moment. What is the contract price? The strike price that you agreed is 630. So you agreed to sell at what rate? 630. So how much profit you make with this option trade? You clearly make a profit of 9 rupees because the market price has got 621. You can buy at 621 and sell them at 630 in the contract. As per the contract, you can sell them at 630. So you clearly make a 9 rupee profit there, but you are also paying a premium of 5 rupees. You will have to take into account the 5 rupees is going from your account, so you would be deducting 5 rupees out of those 9. So total net amount would be only 4 rupees. So 4 rupees would be multiplied with your total number of units. So total would come 5,500 rupees.
Okay, sir.
Okay. Any confusion here? Anyone? Clear these two examples?
Yes, sir.
Okay. Okay, so okay, we still have some time left, so just scan through if you have any confusion with any of the topics or the questions that you have. We can discuss them now.
Sir, can you provide us a list of questions for the mock as you did earlier at the time of level 1 mock?
Okay, no worries. So maybe what I'll do, I'll share those on the group, right? So that you can probably go through them. Maybe just prepare them.
And sir,
Okay.
the PPT also, the regulations one.
Yeah, that I've shared yesterday, I guess, in the group. PPT is shared in the group yesterday, so you can download
Okay,
from
sir.
there.
Okay, sir.
Okay. And okay, so maybe scan through with the questions and all those questions that you have in your mind at the moment. Then other than that, probably I'll just share you the list of questions which I have, and you can prepare on those lines.
Sir, will the final exam include practical questions too?
Practical in a sense, then the numbers and all.
Yes, sir. So, in the FX module and in the fixed income securities module, the assessment part, there were certain questions relating to practical questions. So, I was confused in that part.
So yeah, so there could be such questions which you have in assessment for sure. Those kind of questions can there be, but those would not be that tricky wherein you really spend a lot of time in making those calculations. It would be very straightforward. So even the FX questions that you have in assessment, those are simpler one only, where you will not be needed a lot of time to do those calculations. It would be quite straightforward. So, but if you have any confusion around the questions that you have in your assessment, maybe you can share the screenshot. I can let you know it. Those are just formula based, or the straightforward calculation wherein you do not need not be doing lot of calculation, lot of numbers. So that is how those kind of questions can be there. You can expect them. I'm not very sure, but you can expect such questions which you have dealt in your assessment.
Okay, sir.
Yeah. Okay, so one So I would tell you like what all thing you should be keeping in mind. One, the IPO process, right? Uh, the kind of equities that we have, common equity, preferred equity, right? And then, you know, ADR, depository receipt, you should be knowing about the ADR, GDR, and the IDR process, right? So you need to be clear with the process and what these receipts are all about. That's one. Then you should be clear about the financial market, right? Why the financial market is there and various participants, regulators, various markets which is part of the financial market. That is what one should be clear. Depository, custodian, broker dealer, order driven market, and code driven market. All these details one should be very clear. Then coming to a fixed income chapter, the fixed income chapter has got different kind of securities in it. So you should be clear with those deferred one, right? And convertible, callable, puttable, and then T-bill in money market, T-bill, all those kind of money market instrument, T-bill, repurchase agreement, a commercial paper, right? And you have got certificate of deposit, all those money market instrument. One should be clear how the pricing of T-bill happen with the Dutch auction method. That is what you should be clear with. And then other than this, coming to the FX is about non-deliverable forward, currency forward. These are the two things. And then about the various currency regime that we have, floating currency regime, fixed currency regime. These aspects one should be very clear. And then right example of all those examples which we have, a currency forward, or you can take currency swap, interstate swap, equity swap. All those example one should be clear. You should be comfortable enough while explaining those examples in the mock interview, right? So that's another thing. And coming to derivatives, so options, we call put option, right? That is what you should be clear with. Then you should be clear with your forward future option I've already talked about. Then swap as a definition, and the example that I gave you. You remember I shared one PPT with you which has financial derivatives in it. So that covers your option, that covers your the forward, that covers your interstate swap, that covers your currency swap. So have a look at that PPT so that you're clear with those examples. There's one. That's another thing. And then corporate action, right? Corporate action is various different kind of corporate action. One should be clear. The way relevance of the date in the corporate action, that is what one should be clear. Coming to your mutual fund, so different kind of mutual fund that we have got. That's one should be clear. Hedge fund, different kind of hedge fund, the fourth kind of hedge fund that we have studied. So that is what you should be knowing. Then what is the benefit of mutual fund? Different 5 benefit is listed in the PPT, so that is what you should be clear. And what is this reference data reconciliation? Reference data like ISIN, QSIP, right? ANSI-DOL, Valerie number, what these numbers are, what is Reuters, what is Bloomberg, what are their role in the financial market, right? Why we have a reference data in the in investment banking as a separate function, right? So then the reconciliation, why we have a reconciliation, different reconciliation, position reconciliation, nostro reconciliation, what are these all about, right? And so that's on the reconciliation front. Then trade life cycle. The trade life cycle, you need to be clear with trade life cycle also. The steps which I told you in the very same way, you should be clear with the trade life cycle, right? And then stock lending and borrowing. What is the benefit of stock lending and borrowing? Why and who do stock lending and borrowing? Is it everyone is allowed to do stock lending and borrowing, and who all are the participant to the stock lending and borrowing market? Then KYC AML, as in the risk-based approach, money laundering, different 3 layers of money laundering, right? And so those things you need to cover. and then the last is your risk management and the regulation, Basel norms, and what is FATCA, what is OPEC, what is EMI regulation, what is Dodd-Frank. All these regulations one should be clear, and then the final is the risk management. So these are the present. If you look at your entire certification curriculum, it is certainly, I would say, it's quite big one. It has got a lot of information in it, and therefore I always tell, like, you require some good time to go through or read through the entire content that you've got. So, and that's the only reason I gave you enough. I give you heads up in the beginning only, like you would be having your your final mocks, so that you have ample time to cover all that stuff. So that all thing would be there in your mock 3 or final mock. So, but you look at this final mock as the final interview, because if you are doing good in the final mock, so that basically reflects you're ready for the interviews. And if you are not able to catch up with the requirement, then certainly you need more time to be ready for the interviews and all. That is what I would say it basically means. So you need to be ready for the challenge, you need to be ready for the real challenge, and also the mock challenge you're going to get, right? So prepare with that bent of mind, prepare with this thought that you need to be ready for the final interview, final as in the job interview.
Sir, one last question, sir.
Yeah,
So,
go ahead.
as you have asked, why investment banking and not commercial banking?
Yeah. Okay. Why investment banking? Why not commercial banking? Okay.
Yes, sir.
Okay. So, so this is, there is no straightforward answer to such question, right? It is more about how you give your answer. So why investment banking? Because investment banking is a part of banking, right? So you are more interested to work directly into the operations, like front office, middle office, or back office, because you have studied a lot about these functions, and you develop this interest by reading a lot of stuff, by putting your efforts straight into the investment banking. You probably did not read much about the commercial bank or commercial bank operation, and given you did not put in your best effort in your understanding the commercial banking, probably you would not like to be part of the commercial bank. You would like to be part of the investment bank, where you can contribute more significantly, right? Because you have the understanding, you have the knowledge, you probably have planned it for investment banking, so you investment banking only, right? So as such, commercial banking opportunity can also be good for an individual who is aiming to get into a banking. So you cannot rule out the commercial bank is bad, but it ultimately depends on the interest of the individual. So you can probably just align this question with the interest only. So you have got more interest towards investment banking than at the commercial banking end, and for that you have done the homework. And then done the homework means you have actually done your studies in the same side. You've done the certification, along with the certification you have done all other efforts to gain more more all-round information about the investment banking, and at the same time you always read about the market and all, which reflects your interest to make your career in the investment banking, not in the other side of the investment bank, not the other side of the banks like commercial bank or any other aspect of the bank. So it's an individual way of answering the question. That is how I would say, right?
All right, sir. Thank you.
Welcome. Okay, guys. So any other questions? Any other question you have? before we close, let me just take your attendance in the meantime, and you can think of the question if you have any. Okay, so okay, so today is 4th July. And Rishabh is there?
Yes, sir.
Okay, fine. Shatmanu is not there, right? Shatmanu was not there yesterday. He isn't there today. Okay, fine. Okay, let me quickly call out the names whom I have marked present today. So Rahul is present, right? Nipun is present, and Rishabh is there, Anjali is there, Lavesh there, Gaurav there, Ayushi there, and then Naritya is there, Pranav is there, okay, and Mahendra is there, Siddharth is there, Apurva is there, right? So anyone's name I didn't call. Okay, so
Sir, even Pranav is there.
yeah, I marked your name attendance. Yeah.
Okay, sir.
Okay. Okay, so that's it, guys, for today. So if we don't have any more question, then we can close for today. And I wish you all the best. Though we have another,
Sir, I
another.
have a questions in regard of swaps, but I will ask in next class.
Okay, no worries. Yeah, that's fine. So we can take your questions in the next revision class, that is on the Saturday. In the meantime, if there is anything, we can probably take it now, or we can close it for today. And I wish you all the best. Do your put your best effort for the final preparation, and then be ready for the final mock. All the best. Do well.
Thank you, sir.
Okay, welcome,
Thank you
guys.
so much,
So,
sir.
Thank you, sir.
Thank you.
okay, welcome. Bye bye, guys. See you. Take care.
Bye, sir.
Bye bye.